The most dangerous moment in a trader's career is not after a loss, it's right after a win. You see, a loss makes you humble. It forces you to respect the market. But a win makes you dangerous. It fills your veins with confidence and clouds your judgment with the illusion of genius. The deadliest mistake traders make after a win is believing they've found the formula. The most dangerous moment in a trader's journey doesn't come after a crushing loss, but immediately after a win. It sounds paradoxical, even absurd. After all, isn't success what every trader seeks? Isn't the goal to make profitable trades, to be right about the market's direction, and to walk away with gains? But in truth, it's precisely that moment, when the taste of victory is fresh, that most traders unknowingly step onto the most perilous ground, because a win doesn't just boost your account, it alters your state of mind. It gives you a sense of certainty that can quietly destroy your discipline. A loss makes you cautious. It forces you to analyze what went wrong, to tighten your stops, to rethink your entries, to refine your system. Pain educates. But a win, especially a big one, often teaches the wrong lesson. After a profitable trade, the human mind tends to overestimate its control over randomness. The market's chaos starts to feel like a predictable pattern, as though the trader has finally cracked its code. The truth, however, is that one profitable trade proves only one thing, that you were right once. It says nothing about your future trades, your consistency, or your control over risk. When a trader wins, a subtle psychological transformation occurs. Confidence quietly becomes arrogance, and logic is replaced by emotion masquerading as insight. You start thinking the market is confirming your genius rather than your decision. You feel as though you've earned the right to take larger risks, to loosen your rules, to trade more aggressively. You begin to believe that the market has revealed its rhythm to you, that your instincts are now tuned to its frequency. This is the exact moment when the seeds of future failure are planted. The problem is that the market rewards and punishes on its own schedule. It doesn't care about fairness, effort, or ego. Sometimes even a bad decision will make money simply because the market's short-term movement aligned with your position. And sometimes a good, disciplined trade will lose the market shifted unexpectedly. When traders mistake the outcome of a single event for evidence of personal mastery, they step into the realm of delusion. A few wins can convince a trader that he has evolved beyond the need for discipline, that his intuition alone can guide him. But the market is always waiting to humble such confidence. The danger after a win lies not in the numbers on the screen, but in the shift that happens within the trader's mind. The calm observation that existed before the trade is replaced by excitement. The hunger for another hit of profit grows stronger. Winning triggers the same chemical reactions in the brain as gambling. Dopamine surges, reinforcing the behavior that led to the reward. Soon it's no longer about making sound trades, it's about chasing the feeling of being right, of being powerful. The trader stops trading the market and starts trading his own emotions. Many traders who blow up their accounts don't do so after a losing streak, they do it after a winning one. They start doubling position sizes, ignoring signals that once mattered, and taking trades that don't fit their system. They tell themselves they're just riding the momentum, or pressing their advantage. But in reality, they've lost touch with their risk boundaries. One or two lucky wins give them the illusion that they can't be wrong, and that illusion blinds them to the randomness of markets. Every professional trader eventually learns that the goal isn't to be right, it's to stay in the game. A win should be treated like a temporary gift, not a validation of brilliance. The wise trader uses it as an opportunity to reflect: was the decision process sound? Was the entry justified by the system, or was it driven by impulse? What would have happened if the market had turned against me? These questions preserve humility, and humility preserves capital. But the trader who treats every win as proof of superiority invites disaster. Pride has no place in speculation. The market doesn't flatter, it tests. After a win, the most critical action is to pause, not to pounce. Lock in the gain, review the process, and remind yourself that the next trade starts from zero. The market doesn't care about your last victory. It has no memory and no sympathy. You must meet each new opportunity with the same respect and detachment as if you had just come off a loss. The trader who can do that, who can remain grounded in the face of success, is the one who survives. So the deadliest moment is not when you lose, but when you start to believe you've stopped losing for good. That's the quiet instant when the market stops being your teacher and becomes your executioner. Confidence must be earned trade by trade, never assumed. After a win, the question isn't, how much can I make next? But how can I protect what I just earned? Because in the end, it's not the victory that defines a trader, it's what he does immediately after. After a big win, traders often fall victim to one of the most deceptive illusions in the market, the illusion of control. Success breeds confidence, and confidence, when left unchecked, turns into something far more dangerous: conviction without foundation. The human mind has a strange way of rewriting history after a victory. You remember every reason you took the trade, but you forget every doubt you had before pulling the trigger. The brain connects the dots backward and convinces you that your analysis was flawless, your timing perfect, and your instincts exceptional. You begin to believe that you didn't just catch a move, you created it. This illusion is subtle but devastating. One profitable trade of them can distort perception to the point where you start thinking you've figured out the market. You start to believe that you can sense its direction through intuition rather than logic. Instead of seeing randomness and probability, you begin to see patterns that may not even exist. This psychological shift makes you abandon what worked, the rules, the system, the patience, and replace it with overconfidence disguised as skill. You are no longer trading your plan, you are trading your emotions, dressed up as expertise. The market, of course, has up respect for feelings. It rewards good timing temporarily but punishes arrogance eternally. The illusion of mastery causes traders to take larger positions, loosen stops, or skip confirmations they would never have ignored before. It's as if success flips a switch that tells them the market will bend to their will from now on. But the truth is brutal: the market doesn't bend, it breaks. It breaks those who think they can control it. When traders mistake luck for skill, they lose sight of one of the core truths of speculation. Outcomes in the market are probabilistic, not deterministic. Even the best trade setups only offer a high probability edge, not a guarantee. Every profitable trade has a degree of luck attached to it, and every losing trade may contain the right logic applied at the wrong time. But after a win, ego distorts this balance. The trader starts to see himself as the reason for success rather than the process. Once that happens, discipline begins to decay. Let's take an example. A trader spots a breakout, enters early, and rides a strong trend. The position closes in profit. It feels good, better than good, it feels right. That sense of being right creates a feedback loop. The trader tells himself he saw what others missed, that he read the pulse of the market. Next time, instead of waiting for confirmation, he enters earlier, convinced his instincts will catch the move again. Maybe it works once more, maybe twice. But sooner or later, that same boldness meets a false breakout or a reversal, and all the gains vanish in one careless trade. What happened wasn't bad luck, it was misplaced belief. The illusion of mastery replaced the discipline that created success in the first place. The danger of this illusion is compounded by the way our brains process reward. When a trade works, the dopamine rush feels like proof. It cements the idea that we have found the secret key to the market's code. But the market has no code, only cycles, patterns, and probabilities that shift with time. Every moment you believe you've decoded it, the market changes its language. This is why seasoned traders like me, despite their immense experience, always emphasized humility. They understood that success in trading is not about predicting the market but aligning with its rhythm. And that rhythm is never permanent. The illusion of control also manifests in subtle behavioral shifts. After a win, traders become less patient. They chase trades that are almost right. They interpret neutral market conditions as setups because they feel compelled to keep winning. A quiet market becomes unbearable because their newfound confidence demands action. The same trader who once waited days for the perfect setup now forces trades to prove his superiority. The irony is painful: the more a trader believes he's mastered the market, the more his decision-making deteriorates. This illusion also isolates traders from reality. They stop listening to the market's feedback. Losses that follow are rationalized as temporary pullbacks, or market noise. The humility to admit error vanishes, replaced by defensiveness and denial. By the time the market delivers a harsh correction, it's not just money that's lost, it's perspective. To overcome this illusion, a trader must remind himself constantly that no win is permanent and no loss is final. Each trade is independent. The last success does not entitle you to another. It merely gives you the responsibility to stay objective. The best traders detach emotionally from results. They celebrate the process, not the outcome. They know that the market gives and takes without emotion, and that the moment you think you control it, it has already begun to control you. The illusion of mastery after a win is the most seductive trap in trading because it feels like truth. But it's a mirage, a reflection of confidence projected onto a random surface. The market's job is to expose that illusion, and it does so ruthlessly. The only defense is self-awareness, to look at a win not as confirmation of genius, but as one event in a long series of probabilities. Once you accept that every trade, win or lose, becomes part of a disciplined process rather than a test of your ego, and that ultimately is what separates the trader who survives from the one who vanishes after success. The market punishes arrogance more swiftly and more brutally than it punishes ignorance. That is a truth every seasoned trader eventually learns, often at great cost. When a trader wins, Especially after a series of victories, something subtle yet dangerous begins to take hold. The trader starts to believe the market respects him. He starts to think he has a relationship with it, a kind of unspoken understanding. But the market is not a friend, not a teacher, not even an enemy. It is a force. It owes you nothing, it feels nothing, and it remembers nothing. The moment you think it cares about your success is the moment it's ready to take it all back. Arrogance in trading doesn't announce itself with a trumpet. It creeps in quietly, disguised as confidence. You begin to tell yourself that you've earned the right to loosen your stop losses, to skip your confirmation signals, to trust your gut, because you've been right before. You stop listening to the market and start listening to yourself. The problem is that the market is reality, and reality always wins. Arrogance builds an echo chamber where only your own voice bounces back, reassuring you that you're in control. But no one is ever in control of the market. Every professional trader has seen it happen. Someone has a great run, makes impressive returns, and then, with one overconfident move, gives it all back and more. It's rarely because of a bad strategy, it's because of ego. Arrogance turns traders into gamblers. They double their positions after a win, convinced that they're on a streak. They start seeing the market not as a dynamic system, but as an opponent they can beat through willpower. But the market doesn't reward defiance. It rewards alignment, being in tune with what is, not what you believe should be. The arrogant trader stops aligning and starts forcing outcomes. That's when the market reminds him who's really in charge. Arrogance after success is especially dangerous because it blinds you to changing conditions. A trader who's too full of himself stops observing. He assumes that what worked yesterday will work tomorrow, that trends will continue, that patterns will repeat just because they have before. He begins to think the market follows rules he invented. This illusion of predictability is fatal. The market's nature is to change without warning, to shift sentiment, to reverse direction, to humble those who think they've mastered it. The arrogant trader never sees the change coming because he's too busy congratulating himself on his last victory. The great traders of history, including me, learned to fear arrogance more than losses. Losses teach you to survive. Arrogance makes you forget survival altogether. It convinces you that risk is an illusion, that rules are for lesser minds. The first thing arrogance destroys is discipline. The trader who once measured every position carefully now takes reckless risks. The stops that once protected him now feel unnecessary. The patience that once defined him now feels like weakness. He trades not to profit, but to prove he's still right, that he still has it. That's when he stops being a trader and starts being prey. What makes arrogance so lethal is its timing. It strikes when you least expect it, when you're winning. After a string of profits, you feel untouchable. The losses of the past feel distant, irrelevant. You forget how fragile success really is. But trading is not about being right once or even a few times. It's about being right enough, while being wrong gracefully. The arrogant trader can't handle being wrong, so he doubles down, adds to losing positions, refuses to exit because the market will come back. It doesn't. When it doesn't, arrogance turns into desperation. The fall is always fast. In markets, humility is not weakness, it's armor. It keeps you flexible. It keeps you alert. Humility allows you to admit when you're wrong before your account reminds you. Arrogance does the opposite. It blinds you until reality forces your eyes open. The market doesn't need to crush you. It just needs you to stop respecting it. Once you stop respecting it, you start breaking your own rules, and that's when your downfall begins. A trader who respects the market treats every trade as uncertain, no matter how strong the setup looks. He doesn't gloat after a win, he reviews it. He doesn't sulk after a loss, he learns from it. But a trader who's grown arrogant does neither. He believes the win is proof of mastery and the loss is an injustice. That mindset guarantees eventual ruin. The market's job is to remove those who refuse to adapt, and arrogance is the refusal to adapt. The paradox of trading is that success can be more dangerous than failure if it breeds overconfidence. The market punishes arrogance because arrogance leads to blindness, and blindness in trading is fatal. The best traders stay humble not because they fear the market, but because they understand it. They know the market doesn't care who they are or what they made yesterday. Every day is a fresh test, and past success doesn't grant immunity. The moment you forget that, the market will remind you, in the most expensive way possible. So, when you win, take your profit, but also take your humility. Remember that the market gave you an opportunity, not a crown. The market punishes arrogance not out of malice, but out of nature. It's indifferent, and that indifference is deadly to those who stop respecting it. The only lasting edge a trader has is discipline, and discipline cannot exist where arrogance has taken root. The market doesn't destroy the arrogant trader destroys himself, one overconfident decision at a time. Discipline is the dividing line between those who trade for a living and those who trade for a thrill. After a win, most traders let their emotions take the driver's seat. The feeling of victory, of being right, is intoxicating. It feeds the ego and dulls the senses. You stop analyzing, you stop questioning, and instead of asking, "What's the market doing?" you start asking, "How much can I make next?" That's when the slow erosion of discipline begins. In trading, the markets don't have to turn against you to ruin you. Your own excitement will do the job faster. When I said that speculation is as old as the hills, he wasn't talking about charts or numbers. He was talking about human behavior. Every generation of traders repeats the same mistake after a win. They believe they've transcended the need for structure. They confuse momentum with mastery. The discipline that helped them win, the patience to wait for the right setup, the restraint to manage risk, the clarity to exit at the right time, suddenly feels unnecessary. The thrill of success tricks the brain into thinking the rules no longer apply. But that's the trap. The market doesn't change because you made money, it changes because it always does. True discipline begins where emotion ends. It's easy to be disciplined after a loss. Pain brings humility. It's much harder to stay disciplined after success because success breeds noise in the mind. You start hearing whispers like, "You could have made more," "Next time, go bigger," or "You're on a roll." These are the siren songs of overconfidence, luring traders to steer their ship straight into the rocks. A disciplined trader recognizes those thoughts for what they are, distractions, and returns to process, not impulse. Every professional trader knows that consistency is born not from intelligence, but from discipline. Intelligence might get you into a good trade. Discipline keeps you in the game long enough to survive the bad ones. After a win, the temptation is to trade more, to capitalize on your hot hand. But trading is not poker, and the market doesn't care about streaks. The idea of being on a roll is a psychological illusion. Each trade is independent. The disciplined trader treats every new position as if it's his first, with no emotional residue from the last outcome. He resets his mindset to zero because he knows the market has no memory. Discipline after a win means asking the uncomfortable questions. Was this trade successful because of skill, or did luck play a role? Did I follow my rules exactly, or did I get away with a mistake that happened to work? A disciplined trader doesn't measure success by the size of the profit, but by the quality of the decision. The win itself is secondary, the process is primary. If the trade violated the system but ended well, the disciplined trader treats it as a red flag, not a reward, because he knows that luck disguised as skill is the most dangerous form of deception. The undisciplined trader, on the other hand, measures progress only by profit. He doesn't ask questions because he doesn't want to spoil the narrative of his brilliance. He doubles his size, takes more trades, and loosens his structure under the illusion that he's in sync with the market. What he's really in sync with is his own emotion. The market will eventually remind him of the difference, and it will do so in the most painful way, by taking away what he gained. Discipline isn't just about following rules, it's about managing energy and emotion. After a win, adrenaline is high and clarity is low. That's when impulsive trades happen. A disciplined trader recognizes the physiological side of success. He steps back, takes a break, and lets the emotional charge dissipate before taking another position. He knows that trading while euphoric is as dangerous as trading while desperate. Both are emotional extremes that cloud judgment. Discipline means staying in equilibrium, neither too fearful nor too confident. Every win tests your ability to remain detached. The goal is not to suppress emotion, that's impossible, but to prevent emotion from dictating action. Discipline is the muscle that keeps impulse on a leash. It tells you to take profits and walk away even when greed whispers, hold for more. It tells you to stay patient even when the market teases you with near setups that don't fully align with your rules. It reminds you that consistency beats excitement every single time. I often said that the big money is not in the buying or the selling, but in the waiting. Waiting requires discipline, the kind of discipline that doesn't flinch when others rush in or celebrate prematurely. A disciplined trader doesn't chase, he positions. He doesn't react, he plans. After a win, he doesn't see himself as invincible, he sees himself as responsible for his mindset and his process. In trading, the market will always test your discipline more than your intelligence. Anyone can make money once. The real question is, can you keep it? The answer depends entirely on how you behave after success. Will you let emotion dictate your next move, or will you remain grounded in your plan? The undisciplined trader seeks the next thrill, the disciplined trader seeks longevity. The market rewards the latter. So after your next win, don't rush to trade again. Review your process, protect your capital, and return to neutrality. The market doesn't care about your excitement, but it will always respect your discipline. Because discipline, not talent, is what separates the trader who lasts a season from the one who lasts a lifetime. Ladies and gentlemen, if there is one thing the market has taught me, after years of profit, loss, and everything in between. It is this humility isn't weakness in trading, it's survival. The moment you think you're bigger than the market will show you exactly how small you are. I've seen traders come and go. I've watched men make a fortune in a single season and lose it all the next, not because they lacked intelligence, not because they lacked skill, but because they lost humility. They started to believe that success meant control, that their last victory was proof of their invincibility. But the market doesn't care who you are, how much you made, or how smart you think you've become. It doesn't flatter your ego. It tests it. After a big win, pride whispers in your ear. It tells you that you've cracked the code, that you've seen through the market's mystery, that you can afford to take bigger risks because this time you've earned it. And that voice, soft as it sounds, is the sound of ruin. Pride is the invisible hand that pushes traders from triumph to tragedy. When I was young, flush with early profits, I believed had the market figured out. Every trade confirmed my brilliance. Or so I thought. I stopped respecting the market. I stopped fearing it. And the market punished me for that arrogance. Not because it had a grudge, but because that's what the market does. It has one rule: it destroys the unguarded. And pride, my friends, is the greatest lapse in guard a trader can have. Humility, on the other hand, keeps you sharp. It keeps you aware. When you're humble, you question your wins as much as your losses. You don't take success as a sign of mastery. You take it as a reminder to stay vigilant. You know that every dollar earned is temporary until you protect it with discipline. The humble trader never assumes the next trade will be as kind as the last. He approaches each new position as a student, not a conqueror. The market is a battlefield, but not one of strength. It's one of endurance. The proud fight to win battles, the humble fight to survive wars. The difference is time. The proud trader may win today, but he won't last the season. The humble trader, steady and cautious, may take smaller victories, but he'll still be here when the rest have vanished. Humility also breeds clarity. It clears the fog of emotion and ego that blinds so many. When you're humble, you can see the market for what it is, not as a reflection of your greatness, but as a living, breathing force with rhythms and moods of its own. You learn to listen, you learn to wait, and most importantly, you learn to accept that you will never fully master it. You can only align with it for a time, and when it shifts, you must shift with it. You see, every great loss begins with the same thought: I can't be wrong. But the trader who remains humble never allows that thought to take root. He reminds himself daily that he can always be wrong. And that's exactly why he sets stops, manages risk, and stays cautious even when he's winning. Humility doesn't mean fear, it means respect. Respect for the market, respect for the process, and respect for the possibility of error. When a trader forgets humility, he forgets caution. When he forgets caution, he forgets risk. And when he forgets risk, he forgets survival. Every downfall begins with that chain. But the trader who stays humble breaks it before it starts. I'll tell you this: a trader's greatest strategy, or his charts, or his indicators, it's his attitude. Because the right attitude keeps him alive long enough to learn, to adapt, and to grow. Capital follows character. If your mind stays grounded, your account stays protected. So the next time you score a big win, don't celebrate too loudly. Don't start thinking you've conquered the market. Instead, step back and whisper to yourself: the market allowed me to win today, but it owes me nothing tomorrow. Let that be your creed. Because humility, more than anything else, will protect not just your capital, but your career. And remember this final truth: the market doesn't destroy the humble, it ignores them. But it never fails to destroy the proud. Stay humble, stay watchful, and never forget, once you stop respecting the market will stop respecting you. That, my friends, is the cost of pride and the price of survival.